Unemployment claims blow past the old record and the Senate approves the first stimulus package. This is the Silver Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. On Monday, the markets had another tough day. The Dow closed down 582 points, the S&P closed down 67 points, and the Nasdaq closed down 18 points. The Dow was down as much as 800 points during the day, but was able to recapture some of its losses in the afternoon. On Sunday, the Federal Reserve announced it would buy U.S. government debt and mortgage-backed securities in the amount needed to support the economy, opening what many are calling unlimited quantitative easing. However, Congress's inability to agree on a fiscal stimulus package may have had the bigger impact on the markets than the Fed's announcement. The stimulus package, which called for $2 trillion in aid, was voted down by Democrats who felt the package did more to support Wall Street than it did Main Street. We also had Nordstrom in the news announcing plans to suspend its dividend and halt stock buybacks, the same move made by Macy's last week. And Applied Materials and Twitter withdrew their earnings estimates for the upcoming quarter on Monday. Coronavirus cases continued to soar, surpassing 300,000 on Monday with over 16,000 related deaths. On Tuesday, the market bounced back in a big way. The Dow closed up 2,100 points, the S&P closed up 209 points, and the Nasdaq closed up 557 points. Investors were optimistic about the $2 trillion stimulus package being passed by Congress. The Dow registered its largest points gain ever and its second best percentage gain since 1933. In coronavirus news on Tuesday, cases jumped to over 400,000, with NYC, New York City, becoming the epicenter of the U.S. Bill Ackman, the money manager who last week advised the president to shut the country down for 30 days, made the news again this week for his recent stock purchases. Ackman increased his stake in Berkshire Hathaway, Starbucks, Hilton Worldwide, and Lowe's. Was Tuesday's rally the start of the markets moving back up or a bull trap? We'll find out in 30 seconds. In earnings news, Nike stock jumped 13% in after-hours trading after it reported an EPS beat by 22 cents and a revenue beat by $530 million. Nike reported revenue growth of 6% in the Nike brand, 11% growth for Converse, as well as growth in Nike Direct. Revenue fell 4% year-over-year in Greater China due to the coronavirus outbreak. Nike did not provide guidance for the next quarter. On Wednesday, markets closed mixed on the day. The Dow strung together a second day of gains, closing up 495 points. The Dow was up as much as 900 points, but faded off the highs late in the afternoon. The S&P closed up 28 points, but the Nasdaq closed down 33 points. Wednesday was the first time in a month the Dow closed up 2 days in a row. Investors were optimistic about the $2 trillion of stimulus that was close to being approved on Wednesday. Some details of the bill included $25 billion for passenger airlines, $4 billion for cargo companies, and $17 billion for companies deemed important to national security. In earnings news, Micron Technology reported an EPS beat by 8 cents and a revenue beat by $110 million. Micron's managers noted stronger data center demand due to increased gaming, e-commerce, and remote work activity, as well as an increase in worldwide demand for notebooks used in corporate and education markets for the work from home and virtual learning crowd. On Thursday, the Dow added a third day of gains. The Dow closed up 1,300 points, the S&P 500 closed up 154 points, and the Nasdaq closed up 413 points. Investors were enthusiastic about the Senate finally passing the stimulus package, but the big news was a record jobless claims reported. 3.2 million Americans applied for unemployment benefits, blowing past the old record of 695,000 back in October of 1982. Just a few weeks ago, unemployment claims were at a 50-year low, to give you an idea of how bad things have gotten. Some analysts are predicting that the unemployment rate could climb to 20% or higher if the country is shut down for months. In earnings news, Lululemon beat EPS estimates by 3 cents and revenue estimates by $20 million. Lululemon reported revenue growth of nearly 20%, comparable store sales increased by 9%, and direct-to-consumer net revenue rose 41%. Lululemon didn't provide 2020 guidance due to the coronavirus pandemic. And GameStop beat EPS estimates by 48 cents but missed on revenue by $20 million. Total comparable store sales decreased by 26%, which was better than the 27% that was expected. On Friday, the market rally came to an end. The Dow closed down 915 points, the S&P closed down 88 points, and the Nasdaq closed down 295 points. The good news on Friday was the House of Representatives passed the $2 trillion stimulus package, which left the president's signature as the last detail before checks can begin going out. In Europe, countries including Italy, Spain, and France were calling for joint issuance of a corona bond to raise funds through the debt markets to help deal with the crisis, but it was struck down by other EU member countries. In other news out of Europe, UK Prime Minister Boris Johnson tested positive for the coronavirus. We wish him and everyone else around the world suffering a speedy recovery. Overall, the markets closed up on the week, but does that mean we're out of the downslide? I'd say no. The Dow traded up to the support level from 2018, which served as the jumping off point for the 2019 market rally. That level now serves as resistance, and selling pressure there could send the markets down to retest the most recent lows. Also, outside of stimulus checks, there's no news that things are getting better. which investors will need to hear before going all in on the markets. In crypto news, a complaint filed in the Northern District of California has Ripple investors accusing Ripple CEO Brad Garlinghouse of promoting Ripple while liquidating his Ripple position. That'll be something to keep an eye on. On the charts, Bitcoin was up 6.8% from last week and was trading at $6,654 to end our week. Ethereum was trading at $137.15, up 3.8% from last week. Litecoin was trading at $40.61, up almost 6% from last week. And Ripple was trading at 17 cents, up 13% from last week. Crude oil closed down on the week. We ended the week at $22.53 per barrel. U.S. oil companies continue to pressure the Trump administration to mediate a truce between Russia and Saudi Arabia. Low oil prices and the slowing economy could force a lot of smaller U.S. oil companies to file bankruptcy if the price oil war between Russia and Saudi Arabia isn't straightened out. A big winner for the week was Aflac, AFL. The stock jumped 32%. The stock rallied with the markets and off news of its acquisition of Group Benefits. A big loser for the week, Direxion Daily Real Estate Bear Shares, ticker DVR. The ETF looks to take advantage of bearish trends in the real estate market. It lost money this week as the markets went up on the back of the $2 trillion stimulus. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, the links to the full stories are in the description below. A link to sign up to our weekend article in Focus is also in the description below. If you're ready to get serious about investing and creating wealth for yourself and your family, check out our latest quarterly newsletter, The Seville Report. Serious investment ideas presented in a way that experienced and novice investors can understand. If you're ready to master the markets, check out our newsletter at sevillereport.com. Thanks again for checking out the Seville Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comments section. Like and subscribe, and may your next investment be your best investment. See you next week.